Great. Thanks you everyone for tuning in. Look, I'm Oliver Horn. I'm the Group CEO for Elixinol, and I joined Elixinol Global about a year ago with a firm mandate to reset, rejuvenate, and restructure the business to create a global hemp-derived wellness consumer products business. And Ron and I will talk to you about that great reset that we've been doing and the work that we've been doing to really create a prosperous business that is based on the foundations of hemp. We firmly believe as our business that we want to make a positive contribution to people and the health and wellness of people and the planet through the power of hemp, which is one of the most sustainable resources we have. And we can produce from that a wide range of products. And we are a global leader in CBD products, both as a nutraceutical format, as well as in topical skincare products and hemp foods products here that are very prominently traded in the Australian market. And just a bit of great sort of socialite news on the bottom there. You see Chris Hemsworth. He was just spotted 2 days ago buying our hemp seeds in his daily grocery shop. What sets us apart really as a business is that we are in this really new area of CBD, medicinal cannabis and hemp. We are a very established player and authority. We have been in this field for over 25 years. As a publicly listed company, we take quality, transparency, and compliance for those critical health products very, very seriously. And it really puts us in a very different league than a lot of other different players out there that are trying to participate in this trend. Next slide, please. What is really important to understand that we are at the precipice of a consumer and health revolution. CBD is one of the huge global growth trends, and we see in the biggest markets in the world, US and Europe, that the estimated CAGR rates are around 26% for the US and 34% for Europe. At the moment in the US, only 8% of people are using CBD in the last 3 months, which really shows us what kind of an opportunity, consumer opportunity, this category offers. And as a very established brand with a global footprint, we can participate in that trend with a product range that is one of the most extensive that you can get. The next slide, please. This gives us a great overview of our global operations, and what sets us apart from players is that the market tends to be quite colloquial and driven by local players. We are one of the few truly global players. Half of our business and our revenue is in the Americas, where we have a team of around 40 people based in Colorado, where we have production, warehousing and logistics, e-commerce and NPD development. And that is really a heartland and a key driver of growth for our business. But over the last couple of years, we invested ourselves heavily into Europe as well, which is now a very favorably regulated market. Only in November last year, the European Commission decided that CBD is not a narcotic and can be declared as a food. And we have been in this market for now 2 years, currently generating 16% of our group revenues there, but with a leadership position in the UK, giving us a strong first mover advantage as this regulation is changing. Furthermore, here in Australia, closer to home, we are owning Hemp Foods Australia, which specializes on hemp food products. So that's hemp seeds, hemp proteins, hemp nutraceuticals, also hemp skincare line. And that is generating approximately 30% of our revenues. Importantly, this part of the business is at break even, so profitable, and a substantial part of our business because it has been established for over 20 years, and we are the market leader in Australia in the hemp food segment. So a very diversified business with direct entities across 3 continents, but very importantly also with very established route to markets in Japan, Mexico, and South Africa, where we're having long-term supply, licensing, and distribution agreements into those key growth markets. Next slide, please. Now, as I mentioned earlier, we've been resetting the business, and as Ron will show you shortly, that reset had a significant impact on our business. But where we come from was really a business that had many different aspects. We had B2B services, private label, and bulk. and we had to build a supply chain to service that. We are now focusing purely on consumer products and creating a capital light, profitable business model that we are pursuing. And these are some of the highlights and results of the reset that we've been pursuing over the course of 2020 and will continue to do so. First of all, on the back of changing legislation and the favorable regulatory environment towards hemp and CBD products, and on the back of some great cost out initiatives and new growth catalysts into the business, we were able to have a very successful capital raise at the end of last year, giving us a very comfortable cash position with almost $28 million of cash, and a balance sheet that is nearly debt-free. So a very strong capital position. We've reduced our cost base by nearly half throughout the year. And that is not at the cost of investing in new capabilities. We heavily invested in our e-commerce capabilities, but also into our leadership and management capabilities across all parts of the global business. At the end of the year, or at the beginning of 2020, we had our Hemp Foods Australia business for sale. We took the brave decision to retain that business, and are very delighted that this business has been delivering throughout 2020 strong growth, and as I mentioned before, is profitable as well. On top of that, we are divesting ourselves of low margin activities and really driving margin accretion to improve profitability at the same time, while expanding our global footprint, particularly into the European markets, as the legislation is changing in favor of hemp and CBD products. The next slide, please. Ron, I might pass over to you to talk about the financials.
Thanks, Oliver. The headline revenue year on year, you see in 2019, we were just over 30 million. And in 2020, we reported 15 million. The two key drivers for that really reflect a pivot in strategy. You see in the two gray areas are the bulk and private label channels that the business was previously pursuing, which we strategically exited because they were generating low margins, and we were more pivoting to focus on generating a global consumer brand in Elixinol products. And we're starting to see the benefits of that. Our gross margins have shifted from mid-30s to low 50s throughout the end of 2020, and we'll continue to see some improvement on that. In particular, as we put more focus, continued focus on our e-commerce channel, which is now reflecting about a third of our business. So you can see year on year, the business, the Elixinol revenue channel mix has really shifted from about 2/3 branded products to now 90% of our revenues are generated from branded products. As Oliver mentioned, to reflect the new strategy, we've really sharpened and simplified our business model. In particular, moved to a capital light model, outsourcing much of our supply chain, and that's being reflected in our cost base, which has been down 45%, and that's really flown through into our EBITDA that we've reported. You see our half-on-half EBITDA losses were increasing into 2020, and then with the pivot in strategy and the cost reduction, we've made a dramatic improvement on that cost, the cash EBITDA consumption and cash being a capital light model. So our EBITDA improved half on half from almost 15 million loss to an 8 million loss in the second half, now that we've got a much leaner cost base. At the end of 2020, we initiated a capital raise program. We looked to raise 10 million, 8 through an institutional placement and 2 million through a shareholder placement program, which was heavily oversubscribed. We had demand for 27 million. So we ended up taking 12 million of that 27 plus the institutional placement. So we raised 20 million cash. We closed the year with almost 28 million cash in the bank. And our fourth quarter cash used in operations was about 4 million. So we have about 7 quarters of runway of cash available, which we're confident with some signs of optimism on the horizon with some regulatory catalysts and some improving economy, some macro metrics, we see some growth ahead, and we're confident that that cash can get us to a break-even position somewhere in throughout 2022.
Thank you, Ron. If we can go over to the next 2 slides, please. Next one. Very excitingly, on the back of this successful capital raise, we were able to initiate an M&A activity, and we signed a binding SPA with Germany's biggest brand in the space in CBD. This is a cannabis company. The brand is called Kanobo. It's the largest CBD player in bricks and mortar. And very excitingly, this business did nearly $3 million in revenue. And very importantly, it's cash flow positive and breaking even, which is in this very nascent category, highly unusual. So we are taking this to a shareholder vote on the 17th of May with an expectation to close on the 5th of July and then take full ownership of this business. But very importantly, this is the #1 consumer brand and has been successfully launched on the back of the owners being very heavily involved in the media industry previously and doing national advertising at a very low cost, driving footfall into their huge distribution footprint. And if we go to the next slide, please. And this is a distribution footprint that's second to none in Germany, 4,500 doors that the brand is represented. Clearly the leader in pharmacy and drugstore with Rossmann, which is one of the world's largest drug chains, in 2,200 stores, full distribution, and a wide omni-channel presence across Germany. Go to the next slide, please. We are also very excited about this acquisition because the management and the founders will stay with the business. Frank Otto, who is part of the Otto family, which is a dynasty really in Germany, one of the richest people in Germany, and the media entrepreneur and investor in its own right. He will join our board on completion of the transaction, and the management team will continue to run the company with Oliver Heist being a seasoned FMCG leader, continuing to run our business going forward. If we go to the next slide, please. Ron, I might pass over to you for the transaction summary.
Yes, thank you. So the upfront consideration is 9 million euro, which represents about 3.5 times revenue, historic revenue. On a run rate basis, it's about 2.2 times. There's also an earnout component. Oliver, we might just switch to the next slide, please. The earnout of up to 15 million, which, and these numbers are represented in $8. So the earnout kicks in when the Canacare business delivers in excess of 10 million of revenue at 20% EBITDA. So to deliver the maximum earnout potential, the business would be contributing 20 million revenue at 20% EBITDA. So it would represent more than 100% of our revenue that we reported in 2020. And in terms of the script-based, the earnout is all script-based. It's priced in March 2022. Reflects around, at current pricing, assuming constant share price, of around 33% dilution for about, in this scenario, more than 50% of our revenue contribution for 2020-2021.
Thank you.
Also point out, we announced our AGM yesterday, so this transaction is subject to approval by our shareholders. There is an independent expert report on this transaction that provides comprehensive analysis and confirms the approval of that we're seeking.
Thank you, Ron. I guess in summary on the last slide, before we hand over to Q&As, maybe the next slide, look, what you see in front of you is a global business that is positioned in the high growth global CBD and hemp category. We are trusted and established brand, which is very differentiated to a lot of newcomers. We have an expanding global presence with a profitable German business, which is a key global market, one of the key global markets. And we have a broad-based hemp portfolio, including skincare and food products with a very low-cost optimized business model and a very strong balance sheet. So all in all, we are excited about the future and the global trend ahead of us. I think we are well positioned to become a truly global leader based here in Australia. Thank you.
Oliver, Ron, thanks. A great presentation and clearly a transformational deal being put to shareholders in the not too distant future. Just touching on that opportunity, did that come to you, or did you guys sort of scour the world for, a market that you wanted to play in with a product range and a brand that you wanted to bolt onto your own?
Yeah.
And how did that process work?
So we've been trying to enter the German market for a while now because the market is huge. It's the second biggest market in Europe and the fastest growing in Europe as well. Kanacare actually selected us coincidentally. So they gave us a call. They looked for global partners, and because we are one of the few truly global partners, they really called us in May, June last year. We said, not at this stage. We hadn't done our homework, refinancing, but most importantly, the regulatory environment wasn't confirmed. And end of November, the European Commission said that CBD is not a narcotic, but can be declared as a food. We picked up the phone, picked up the conversations, done the due diligence over Christmas, and signed on the 15th of March. So that's how it happened. It's just all good things coming together at once, really.
And a number of companies who play in the CBD hemp space are at the production end and play very heavily in that. And I'd understand to get massive scale would need to have big capital requirements. And then there's others such as yourself that play a bit further down the chain. What's the rationale? And I know you did touch on it, but just to reinforce, what's the rationale in playing a bit further down the chain?
We've been there. We've had a vertical integrated supply chain, and we had a bigger asset structure previously. And simply, it's not. It doesn't represent return on capital employed. There's spare capacity. It's very easy to outsource at very competitive prices. Enough capacity in the market, and we focus really on the consumer end, further downstream. That's where the margin is, and we can be acting profitably. To give you sort of an indication, we are targeting around margins in the mid-60s for our business in the future, gross margins and EBITDA margins in 10 to 12%, which is really where we want to play in the future. And you can't simply achieve that with a vertically integrated business, particularly here in Australia, where the market is pretty small, so you can't achieve that scale.
Final question. It relates to the sourcing of the inputs. How difficult is that, and making sure you have the reliability of supply to meet your branded products?
So we source in market. So our US products are sourced in the US, our European products are sourced in Europe, and we have very long-standing strategic relationships and long-term supply contracts with really the preeminent growers and manufacturers. So we are really well connected there. There's no risk for us of not being able to fuel our growth ambitions at all.